Okay, hi, hello. Thank you. Whoever is has joined the live session. Apologies, I was supposed to start exactly at 9, but then I was just analyzing the market a little bit. So before we proceed with our live, I actually would like to share a bit about what is currently happening in the market, especially to Bitcoin today. There was this huge drop in Bitcoin, especially in London session. Yeah. So I also kind of like went through like my own trading strategies just to see if there were any opportunities to enter the market based on this beautiful strong drop that just happened. Not say just happened, it was happening since morning. But then I only managed to find one so far. So then we will just break that down briefly today before we go into our topic of the day. So this was the movement as of Asia session that was coming in. So I realized and also noticed that if you guys can see, I'm not sure if it's easy to see, but there is this line that I drew. So this is a liquidity zone that I found in H4, and then I realized that market actually reacted very well to this zone, and then there was a very strong push towards the downside. So this was the only actual entry that, based on my strategy, that was shown to me today. But other than that, market just keep going down. As you can see, for London, there was not really much things that I could look at, especially for impulse and also corrective pulse. There was none. There was just a very strong push towards the downside. Yeah, so I'm not so sure if it's related to any news or not. I didn't see anything yet. So later on, maybe we can go through lah if we have time lah. Yeah, so this was the current market condition of Bitcoin. So if you can also notice, right, only right now, price is actually starting to show, I won't say strong, I cannot really say strong, but some bullish price action whereby price is starting to go towards the upside. So we cannot say for sure because there is a bunch of liquidity. If you see all of these lines here that I draw is actually based on different time frames, and then liquidity areas that I found interesting to look at. So these are the areas that I predict that price eventually will go and close them up, since price was already moving in a very strong downtrend. But then we will have to wait and see because New York session hasn't come in yet, and also I cannot really see much price action based on my strategy. So we'll wait and see. We will go through today's session first, and then maybe we will open back the chart, and then we will analyze it together, and then we can just give in our predictions and see what do we think the market will be like once New York session opens. Yeah, so if that sounds interesting, okay, just stay tuned. So let's go into today's session, guys. Okay, I hope yeah, I don't want you guys to see the words. Okay. So the other day, right, we actually did briefly spoke about how do you actually define a candle body. So we actually did spoke about this, but then we didn't really mention like these two very important elements. So that's what we want to speak about today lah. The reason why is important also I will mention. I can also point it out it's actually these lines here. So you see these ones and also these ones. Oh yeah, if you guys are wondering, right, why here there's like a lot more boxes compared to the red one, it's not because the red one is not important. No, it's actually because those boxes, okay, like this part and this part is exactly the same for the red one, same as the bottom parts as well, exactly the same. So I didn't want to put in too many boxes because, to be honest, it really feels like there's so many boxes. Yeah, so I just want to keep it as clean as possible, but don't worry, they're exactly the same. Okay, so before we proceed any further, those that who are watching, do you mind if you can share with me that if you guys have any idea about what are the difference between these two candles here? One is green, one is red. Please don't say this. But again, if you guys are not sure, just let me know. Just let me know in the chat. Bitcoin dropped cow today. Yeah, cow. Really cow already. Bitcoin dropped today. I didn't manage to catch the opportunity for London because at the time I was also at the gym. And then when I opened up my charts, I was like, wow, what happened? It's a crazy drop. Really very strong push towards the downside. Yes, bingo. Exactly. Bullish and bearish candle. Yes, correct. So this is basically, that's the name lah of the candle lah. Nothing too fancy. I also mentioned this to you guys in the previous live also already. So then the thing that we actually want to speak about today, right, is mainly this section here. So this one is just like a refresher. Here's a refresher, okay? But this one is the one I want to explain. Okay, so basically the upper portion of this that day we actually spoke about is this is actually called an upper wick. Okay, so I'll just remove these boxes first to get them out of the way. Okay, so I did not actually specify this part in our live session the other day. So basically, right, this middle portion is called the body. This is what we spoke about that day and how important the body is, especially when we are looking at the bullish trend or a bearish trend. So the body really determines our market structure, if it's actually legit or not. Because usually when we see wicks, not all the time, sometimes body also does this as well, but usually when we see wicks breaking our line, usually that can be a fake out. People call it fake out. Fake out basically means market just goes to that zone to take out liquidity. So maybe I can draw one example what does fake out means. Also today's session I will try to keep it as short as possible because the other day we spent about, I think roughly about almost like 2 hours plus. Yeah, so today I will give you guys some time back now. Okay, one moment. Okay, so these ones, right, is clear. Oh sorry, hold on. I shouldn't point the arrow down, it will confuse you guys. Let me draw that one more time. Okay, maybe I can draw the fake out also straight. Okay, and let me hide this portion. Okay, this is not POI by the way guys, this is just my setting. Okay, I just want to show you guys, okay, just to only focus up to this portion. Okay, so the other day what we spoke about a bullish trend, okay, so we need to see higher highs, higher lows, higher high, higher lows, higher high and higher lows. So we do see a high, a higher low, higher high, higher low, higher high, higher low, and so on. Okay, so what is a fake out? Well, what did I mean by that? What is a fake out? Okay, so for us to determine, right, a successful bullish trend, whenever the peak arises, okay, and then we see a pullback, we draw a straight line. This is what we spoke about the other day. Okay, let me just make this a bit thicker. You have to see. Okay, so we draw a straight line. The reason why we draw this straight line, if you actually not one of the students that actually joined the other day live, the reason why we draw this straight line is basically because price reached up to this point, but it couldn't really push further anymore. Okay, so something actually caused price to push down. Anyways, also price has to move in this direction because healthy price action, you have to see up and down. If you see an instant all the way, just going up all the way down, could be two reasons. Either your trading system has something issue, maybe you have to refresh, or it could be a very big catalyst, something happened. It could be news, could be NFP, yeah, it could be something very big that caused the market to only shoot in one direction. But we call this as unhealthy price action because the market does not like that. Market only wants to see ups and downs, ups and downs, ups and downs. That's why we have two colors, green and red. Actually, to be honest, the color doesn't matter. You guys can customize that. Okay, so again, back to this. How do we determine a bullish trend? The moment when it reaches its peak, okay, and we see a pullback, like what we're seeing right now, we as traders, we draw a line on the peak, okay, a very straight line. And the moment when price breaks that line, we are in a bullish trend, okay. So you see, there's a pullback. What do we do? Same thing, we draw the line. Okay, is there a break? Yes, there's a break. Okay, so what we do, same thing again, we draw the line. Is there a break? Yes. But what do I mean by fake out? Okay, so let me remove this box now. This is what I mean by fake out. So in a bullish trend, okay, that day during our live session, I strongly advise you guys, right, to don't really go against the trend. So this is true. Still stick to this advice. Okay, always play with the current, not against it. Okay, but in some cases, right, this is what happens, especially to retail traders like us, because we don't move the markets, right? Market maker moves the markets. So whenever we see a bullish trend, okay lah, bullish trend, okay, this is the peak, okay, this is my point of entry, okay, I will enter my trade, okay, I will aim the highs, okay, usually they aim the highs of that price range lah, okay, I aim the highs, okay, yay, I win, TP, okay, so again, same thing happened, hits a point, reverse, I cannot say reverse, reversal is a different term in trading, okay, this is reversal, this is a pullback, hits a point, pulls back, same entry model, huh? The other day in our life we always speak about copy paste, that is trading, keep doing the same thing, see, same entry model comes down, we enter the price because it's a bullish trend, so we go for a buy, where is our TP? The closest high. Again, yay, we won again, okay, and we will do the same thing again, okay, so you see, price goes to a certain point, same thing, price pulls back, we enter our entry model, we draw a line, our TP point will be at that high, and then yes, we won again, 3 trades straight away win, okay, awesome, wonderful. So what happens here? This is the interesting point. Let me clear this off so that it doesn't really disturb you guys, because this is important. Yeah? Everything is important actually. Okay, so this is the one that is important. See, yeah? After a pullback, okay, we enter in a bullish trend. Okay, so you see it goes up. After a pullback, we enter, copy paste, bullish trend, pullback, enter, bullish trend, pullback. If this was our entry, because we do the same thing, exactly the same thing. Actually, I shouldn't remove those stuff. Let me get it back. Don't worry, it's actually easy. There we go. Okay, now it's easier to explain. See, goes up, comes down, we enter. This is what I mean by fake out. This point, okay, I highlight this in. Maybe I highlight in orange. Okay, this point is what we call, well, there's many ways that how people call it, but I personally like to call it liquidity sweep. So what does that mean by liquidity sweep? Basically, liquidity sweep means the price is just going to this range to take all of the orders that are resting above there. So what are orders? Orders are basically the buy orders or the sell orders, because in trading we only can do 2 types of actions. One action is buy, the other one is sell. Trading is very simple, very straightforward. Just these two. Okay. So whenever you see suddenly price pushes up and then it shoots in the opposite direction, okay, what that means basically means liquidity sweep, basically means fake outs. There's a lot of terms. Actually, you guys can see online. There's a lot of terms there. But the one that we are sticking to is these two things. Okay, liquidity sweep, or you can call them fake outs as well. So this is the danger point of why in an uptrend you cannot all the time just hope for buying on the pullback. That is why our trading strategies, our bigger time frame buyers, and to be honest, also our smaller time frame buyers are very important. My chart really changed really one moment, guys. Okay, this one. Yeah, this one. Okay. Okay, so again, this example is just to share with you guys what actually happens. Okay, that's why in the uptrend it doesn't always go up, but at a certain point this will happen. It will reach to a point where it is only going there to take liquidity. Once it already grabs all of that liquidity, and then it will shoot in the opposite direction. Same thing happens for downtrends. It will go to a certain point, and then usually these kind of things happen. But one good thing about it is whenever this sort of stuff happens, right, the market, right, really sometimes just totally shifts and keep moving, keep very strongly moving in one way. So now let me show you. Earlier we were seeing the live, right, about Bitcoin, right? I told you guys, right, okay, it's going down. The reason why is because same thing, liquidity sweep. Okay, so you see this point here, okay, it's not clean. Okay, what I mean by not clean is based on like my drawing, it's easier to see. Okay, but I'll just do this. Okay, so it'll be a little bit easier for you guys to understand what I'm saying. Okay, it's not really in an uptrend, not really, but it is going up. Okay, if the way we see it, it is going up. The price was going up, but only to a certain point. So this is the liquidity that I will manage to find in a bigger time frame in H4. So the moment price goes to that zone, can you see the wicks? Sometimes you do see bodies. Don't get me wrong. It doesn't mean that whenever you see a body actually goes above our liquidity range, right? That means the trend is still going to go up. No. Fake outs got many patterns and many ways. If it's only wicks, right, if the market maker only makes it wicks, right, very easy for people to know. They will just wait, oh, there's a wick there, I should not enter. Yeah, they're very smart. They're very smart. But that's our job. Our job is to follow them and to be smart also. That's how you become successful. Okay, so this is the point. As you can see, this is basically the fake out. So it goes out, it takes out the liquidity, and then it goes back down. And you see how much it goes down. This is not a little bit, this is a lot. Based on my entry model, right, I usually go for 2 to 3R. Usually, this is 3R. But this is the only entry model that I was able to find lah. Because after that, in London session, really pushed down, really strong. So this is the formation of once a fake out, a liquidity sweep happens, right? It's really push. Yeah, really push. But don't worry, how to identify them properly, how to utilize them into your trading, how to really find a very proper entry model based on like this type of strategies. There's a lot of strategies, but based like this type of strategies, right? All you guys will eventually learn it. Don't worry. So this is just for me to show you guys. And then usually once a fake out happens, right, especially before an early session happens, so usually it's Asia lah for us, market usually moves away from that. So because since this happened earlier in the morning before Asia session even starts, right, that is the reason why market moved away. So this is why sometimes you see like these professional traders, they will early of the day, right, they will say, okay, my daily bias today is we are going to be in a bearish trend, or we are going to be in a bullish trend. They actually usually look for this kind of stuff, and then they will use this type of fake outs or liquidity sweeps to give people their bias of where they think the market is actually going to go. If you are able to identify this, right, especially if the market shows you, because it doesn't happen all the time. I'll be honest, it doesn't happen all the time. But if market shows you this early, before even the first session starts, right, instantly you got your daily bias ready. Today, okay, is bearish. I need to trade away from this. So, very easy already. You just remove the buy from your mind. Okay, I'm not going to focus anything on buy. I'm just going to focus on sell. Look, if you follow the current now, of course I won't be holding this long, because based on my risk to reward, I try to be very strict with myself. 1 to 3. Sometimes I go 1 to 5. Okay, but majority of the time is 1 to 3, 1 to 1.5, or 1 to 1 to 2. Yeah, 1 to 2. Yeah. But you see the potential, almost 10R. Literally almost 10R. This trade. This is why reading price action. Price is a language. Once you learn how to read that language, you're good to go already. Okay. I try to stick today's live right within an hour, or at least an hour and a half, because I want to give back the time to you guys. Because instead of listening to me talking, you guys have to use the time also to practice. So I will do my best. Okay. So this one I remove first, so then it won't confuse any of you guys. Okay. So come, let's explain even more for this one. So basically we understand this is a bullish candle, this is a bearish candle. Okay, this is the highest price point. What does that mean by highest price point is when this bullish candle actually starts. Okay, when it starts and when the candle actually finally closes, we will get the full picture. Imagine this is the full picture. Okay, this is a very beautiful big body, and then we have a nice wick here, and then also a nice wick here. I can actually remove this also as well, because it's actually the same. This is the portion that I want to emphasize today, because I never get to actually really share it that day. Okay, so what is the highest price point means? Okay, so highest price point basically means this is the highest point of where the candle actually went to before it finally closed and formed a candle like this. I will show you an example, do not worry. Just explaining like this confirm is confusing one, okay? Trust me. Especially if you have no prior experience into trading, this can be very confusing. Do not worry. I will show you guys an example. A live example. Not really live, but replay of a live example, because that's the best one I can show you guys. Okay, so now the thing that I want to show you guys is these points here. Why did I draw a line here? Exactly at the end of each side of the body. Okay, on the upper side and also on the lower side. Okay, I remove this. Then I'll show you guys. Okay, open and close. Okay, why is this a box here? Okay, I remove it. Okay, open and close. Now, you guys may be thinking lah, why am I writing open and close here? For those that maybe have some experience in trading, I'm pretty sure you guys will know lah. But the thing that I'm going to share today is this is actually very important, especially related to the time that you enter the market. Also, I will explain, do not worry. Okay, so why does this say open and this say close? For a bearish candle is different, it's not the same. That's why I draw a box here. For a bearish candle, it's the opposite. This is the open and this is the close. Interesting. I'll show you guys. Just hear me out. Don't worry. I will explain. Okay. When a bullish candle, okay, we focus on bullish first. When a bullish candle is forming basically means it's in progress now. Okay. Price for a bullish candle always starts to open from the bottom. Don't worry, I will show you guys later how a candle form. Okay, we will learn together. Okay, But this is the point where the price will start to fall. Basically, think about it as in a racetrack, right? We have start and then we have finish. Okay, this is the start line for a candle, for a bullish candle. Huh? Okay, don't use this as a bearish candle. It's just you gotta flip it. Whenever we see a bullish candle, this is where price will open. And then, let's say, imagine this is a 4-hour chart, because right now we are in H4. H4 meaning is every candle represents 4 hours worth of data. That means only after 4 hours, one candle will close. Whenever I say close, doesn't mean close. Close basically means that, you see, close. This one, you see, close. This is what I mean by close. So every 4 hours, one candle will close. So again, imagine, maybe I just write that down. H4 candle. Okay. So again, this is a H4 candle. Every 4 hours, one candle will close. So during that 4 hours, this is where the start line is. So the candle will move because whenever a candle opens, buyers and sellers sure will have also. So they will push the price down, and then they will push the price up, it will go up, and then eventually, when the 4 hours are up, it will close. So this is why you will see a lowest price point, highest price point. Basically, you can think exactly like the racetrack example lah. Okay, in the racetrack, takkan you go and race only alone, right? Sure, racetrack means got other people also included into the race, man. Okay, so imagine this. Okay, it opens here, everybody fighting. Okay, you're fighting with other people. So some people push it all the way down. Basically sellers, if go down means sure it's sellers, but they never manage to win that they can close price below. If they can close price below, it will become a bearish candle. It will become red, it won't become blue. So in this case, buyers win. So you see, sellers try. They go until this point. And then after that, the candle starts to go up. This is how a wick is also formed. Basically, wicks means the lowest price point or highest price point. How high or how much did the candle actually range within this time frame? Not necessarily only H4 lah. This is just an example. I'm just giving you an example that, okay, based on H4, this is what happened. Okay? Every time frame is exactly the same concept. Okay, you can apply the exact same concept. It doesn't matter if daily, 15 minutes, 1 minute, even seconds also can. All is exactly the same. Okay, so sellers managed to push the price up to this point, and then eventually buyers came in. Buyers were more stronger. They will keep on winning, and then they push the price all the way to this point. But they also fail. They also fail to close price at the range that they managed to push it to. Okay, eventually price went down. Sellers managed to push it up to this point, and when the 4 hour time, not time frame, I can't say time frame. When the 4 hours is up, straight away candle close automatically. So the time when candle close, this is the point of the closure. So this is why from the previous live episode, whenever I mention, every 4 hours a candle will close, every 1 hour a candle will close, every 15 minutes a candle will close, based on the time frames, of course. This is what I mean. This is what I mean the close. So now, we go into the bearish symbol. Give me one moment, just one moment. Sorry, my cat's all fighting. Okay, so now we go into the bearish example. We don't have to explain so much, exactly the same. The only difference is from what I explained from a bullish candle perspective, right? You just flip. Not everything, Don't flip everything, This part all don't flip, The lower wick, lowest price point, highest price point, upper wick, don't flip. The body also don't flip. Exactly the same. The only thing you flip is the ones that I written here. Just these two things only you flip, okay? Of course, like the names also like you must not flip lah. The names totally different already lah. One is a bull, one is a bear. Just these ones. You guys can flip this. If this is a close, this is a open for a bullish candle. Bearish one, this will be a close. This will be open. Why? Same concept. Copy paste. Whenever bearish candle is forming, this will be the starting point. Basically the race track, okay? The start of the race. And within these 4 hours, how much they are willing to fight and willing to push the price either up or down, this is the results of the wicks. So in this case, price opens up here because for sure bearish candle is always open at the top part, okay? Buyers managed to push the price all the way to this point, basically the highest price point. But again, did they manage to win and close price? No, they didn't. That's why this is a bearish candle. If they did, this would have turned into a bullish candle. So then eventually, sellers still managed to win, and then push the price all the way to the bottom here, to the lowest price point. But sellers also didn't really win. They win, but they didn't win in terms of closing it to how far they managed to push it. Okay? So eventually, the candle come to this point, and then the 4 hours were up, automatically close. So this is why the candle closed at this point, and the wicks, you can see the highest price point that the candle actually went, and the lowest price point the candle actually went. This is why people say actually candle can tell you a story. This is only one type of candle, you know. This is just, I draw this candle because this is the one that easy to explain lah. So candles tell a story about buyers and sellers because we only have these two main players, buyers and sellers. Without these two people, the market won't really actually have any much impact. Yeah, that's why we only have two buttons, buy and sell. Yeah, so we must learn how to actually read this story of what price is actually telling us. So now I'll show you one more special candle which I never draw. So I will just draw it right now. Okay, maybe I'll just draw a line first. This candle is important. Okay, I'll just put red for this example. Okay. I also give a background. Everything I keep background. So sad I never give this candle a background. Oh, one minute. Okay. For those that don't have experience in trading, this definitely will be a very new candle for you. But those that have experience in trading, or in general you have actually seen the market, maybe you even traded before, you definitely have seen this candle before. Okay, so basically this candle is called doji. There's so many others, anyway, so many other candles, but I want to show you this one today because after this, right, I'm just going to touch briefly in support and resistance, and I want to show you the power of this candle. Okay, doji. Okay, so going back to our theory, right, of how we actually explain the storyline based on bullish candle and based on bearish candle. We understand this is the body, okay? This is the highest price where buyers manage to push the price. This is the lowest price where sellers fight back and manage to push the price. Eventually, based on the time frame, the candle is closed here. Okay? Same thing in this point. But how about this? This is the body. Very thin, but this is the body. So what story is this candle telling us right now? Okay? To be honest, it's almost the same only. Exactly almost the same only. Okay, highest price point, lowest price point. The only thing is, when we see this type of candles, right, this type of candles are usually used when based on strategy. I'm not saying all the time, but based on strategy. If someone realize this is happening in the market, okay, we just take the bullish trend now. Okay, someone realize this is happening in the market. Okay, so you have a high, high, low, high, 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 low, high, 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 low, and then this one higher, high lah. Obviously it's higher because it break. Okay, so let me see what I can use. Draw easy for you to excel. Use this now. Okay, this is our point. If we were to trade in a bullish trend, okay, this is the points that we will be interested in to enter. The reason why actually is related to strategy lah. So some people they use Fibonacci, others they use support and resistance, but then majority of them use Fibonacci. But don't get confused about these terms and all. Eventually we will go through them lah. Okay, so whenever price comes into their area of interest, so basically their POI, point of interest, there are traders, especially some of my friends also, whenever price comes into their point of interest, they try to find this type of candle. The reason why is because this candle, the place that it closed is actually at the same place that it opened. Again, don't confuse. See, open, close. Open, close. This means the direction of the market, okay, if let's say it was in a bullish trend or it was in a bearish trend, basically the momentum is dying off already. Buyers and sellers are not really winning this argument anymore. If you see this one, it's very clear. Buyers win. You can see a very beautiful body. Okay, even the storyline of the weeks tells you a story of what happened during their fight. How high they managed to push the price, how low they managed to push the price. But eventually buyers still win. This one's the same. Bearish candle, also same thing. How high they managed to push the price, how low they managed to push the price. But who is the winner at the end of the day? Sellers. But this candle very different. Okay, maybe I can find one. I can show you guys one. Every single take on. Okay. Okay, something like this. Okay, but this is not the exact one. And this one. Can you see it? It looks like a plus. This is a dodgy candle. Okay, the reason why it's not in the place that we want it to be, okay, because obviously this is market is moving not really up, not really down. This section is just sideways. Actually, means this is a sideways consolidation. Okay, because this is a bigger time frame. Eventually, later we will go in the smaller time frame that I will show you. But this is the candle. Everyday God, by the way, guys. Everyday God. So the thing that I want to explain to you is this candle basically means there is a chance. If it is in a bullish trend, a bearish trend could be happening right now. Or if it's in a bearish trend, a bullish trend could be happening right now. It really based on how you see the market, what is your strategy, and then the price managed to come into your POI. Usually people use this only during those times, because if you use like this now, the example, right, you see in consolidation there's one, a dodgy. Takan we go and enter, oh got dodgy, okay, right now bullish trend, okay, let's go bearish. No, it doesn't work like that. They use these type of candles only in their point of interest. So that means we come back to this example. Our point of interest is always after a candle makes a pullback. The reason why it makes a pullback already is our point of interest, because in a bullish trend, we always predict price to break the previous high. That is what our prediction is, and basically that is how a bullish trend is formed. If it never breaks the high, it's not a bullish trend. If it never breaks the high, and it just stays in between, I try to draw that, show you guys. If it never breaks the high, and it just stays here, this is called consolidation already. Basically sideways, there's nothing, there's no real direction, unless you really go into the very low time frame and then you play scalping lah, then okay lah. But there's no really a true market direction lah if this happens. But in our example, this is a bullish trend. Our point of interest is not to enter at the high point. So that will be the most worst decision that we can ever make. But we want to get our best entry possible. So our best entry is eventually at the pullback section. So once price pulls back and then it cannot really go down anymore, that is the place that we actually want to enter. There are ways how to find these areas also, do not worry, eventually we will go through them. Okay, but this is our point of interest. And doji plays somewhat a big role depending on that specific trader and how their trading strategy is. So like I explained, like my friends, some of them really use this candle a lot. So how this candle is very beneficial for them is because, like I said, this candle represents a potential change in who is the more in power lah. So basically, like this one, the more in power is seller, this one is buyer, this one no one yet. So when price comes into their point of interest, if they see this sort of candle forming inside of their form of interest, that is the time they will actually go for a buy. Not right away lah. Usually after this happens and then they see the next candle is a bullish candle, they will go for a buy. Exactly the same concept for sell. Whenever price reaches into their point of interest, they will look out for this type of candle showing that the momentum of pushing down is starting to die off. And the very first candle showing a big push to the upside in this scenario, because it's a bullish trend, they enter the trade. I've seen quite a few traders follow this strategy. If you ask me, are they very successful now following this or not? I don't have the right to say, because I don't know. I'm not sure. But if you ask like some of my friends, when I see, they are successful. They just trade this only, they just follow trend and then they focus on this type of candles. Okay, so basically the one that I wanted to explain today, why this open and close is important, is actually because it's related to your entry. Now we will go and have some fun. We will play in the replay. Then I will show you what do I mean. What do I mean by the entry? Okay, let me clear all of these things off. Yes, remove them. Okay, we got a very clear chart now. Okay. By the way guys, this is a very clear liquidity sweep. Very clear one. Inside I see price push down really short. Okay. So let me take a replay and then I'll show you in this example. This is a good example. Actually, I should have erased first. That's how you guys want to refer. Okay, so right guys, still quite new to this live free teaching things. Give me one moment. Oh, okay, hold on. Exit the replay first. Gone lah, die lah, finish lah, that's it lah. Okay, just remember, for a bearish candle, okay, just remember where is the open and where is the close. Okay, for bullish candle, where is the open and where is the close? Basically, for a bullish candle, green one, this is the close. The top part is the close. This is the open, the bottom part of the body. Bearish candle, just opposite. This is the open. The top part is the open. Bottom part is the close. Okay. So the example what I want to show you is why is this important. It's because this plays a very big role in your entry. So remember I mentioned that upon finding liquidity sweeps, okay, you trade away from the market. Okay, remember this, right? Because once there's a liquidity sweep, it is showing the price is only there to take up the liquidity resting in the area. Once it already take that liquidity, there's a lot of funds, really a lot of funds, it has enough power to push in the opposite direction. Okay, so let's say you manage to locate this, you manage to find this in time. Okay, very next candle, you tell to yourself, okay, but I don't want to just blindly enter based on this. I want confirmation. So my confirmation is how I want to see a bearish candle forming, a good strong one. Once I see that, then only I'll enter the market. This is just a scenario. This is not an exact trading strategy that I'm asking you guys to follow. It's just an example. Okay. Okay, so then they wait for the next candle. Oh, okay, I see a very strong candle. Okay, I remember. This is the open, and then this is the close. I want to enter the market right now. Can I enter? Of course can. But look at the entry. If you enter the market, can you see this line? This is where you will actually enter the market. At the close. So why is that important? Maybe you're wondering why is that important? It is important because it's based on your capacity of how much risk tolerance you actually have. This is a very big candle, okay? And then based on your how to say, your lot size. Lot size is basically how much you're willing to risk per trade. Every trade you have to be willing to risk a specific amount if you want to enter the market. Okay, we will go through lot size. Maybe tomorrow we can go through lot size. I will include it inside of my notes, and then we will go through lot size. So you see, the person, okay, let's say person A, he found out this is a liquidity sweep area. So he instantly knows, confirm I want to trade away from it. Because I know market already accumulated a lot of funds is going to go in the opposite direction. Okay, fine. Very good analysis. But then he's TNC, but after liquidity sweep, I want to make sure that I'm right. So I want to see a bearish candle forming. Okay, good. You see a bearish candle forming. But always be aware that if you want to enter in this type of candles, your entry will be at the close. Same for a buy. Same for a bearish and a bullish candle. Exactly the same. Whenever your entry is right, is always at the close. So for example, this one, okay, I enter here. My SL, where should my SL be? Basically my stop loss on top of the previous high. This is the very safe one. Don't worry about the amount. This one is set based on what I am kind of used to, but not this much. I don't risk this much. It's crazy. Okay, this is like insane already. This is like almost very high percentage already. Okay, but you see, even if you put it above this candle, right, this is not really that safe lah. Okay, but at least above the zone where it take the liquidity is kind of safe, but the proper one is here. So for you to cover back this loss, not loss, potential loss, okay, this is where minimum your take profit must be. Minimum. This is 1-to-1, a little bit over 1-to-1 but easy to how to say, use as an example. Just think of it being 1-to-1. Okay, so this is your SL. This is basically your TP. Okay, this is 1-to-1. If you think, come on, this one, it doesn't seem like so big also. We are in H4, guys. You see, if I go to M5, this is the range, and this is your SL. Can you see how much of candles from the down one we count? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 16 candles. Your SL is above 16 candles. That is a lot of candles to be risking, to be honest. Because no matter what, even though you found a profitable trading strategy, okay, no strategy is 100%. And for us to risk a big percentage of our capital, right, to do a trade is not a smart thing to do. Really not a smart thing to do. That is why you need to understand where is the opening of a candle, where is the close. Every entry that you put, but also have to depends on the how to say, not swap fees but spreads. So spreads is another thing that you have to look out for. Okay, I will do maybe tomorrow we'll speak a little bit about spreads also. Okay, but in this example, every point where the candle closes, that is where your entry will be. So in this case, this is our entry. Okay, fine. Market going down, up, go down, up, down, up. See, look at this. The market does go up a bit. Okay, that feeling of a trader has to be very strong. You have to be very, very, very confident in what you are actually trying to perform. Okay, not just blindly perform. Then any trade, so you'll be very scared. Okay this trade actually not that bad because it goes up to this point only, and then after that it starts to flow down already, and then eventually during this kind of time, okay, sure, we already set BE and then like risk free already, nothing to worry already. Eventually, okay, it goes to P. Yay! Good trade, very easy trade. Yeah, easy. But again, not a wrong thing to do. Okay, definitely not a wrong thing to do, but a lot higher risk just to enter based on that. A lot higher, really a lot higher, because your asset will be so much more bigger considering the size of the candle. So this is why it's very important. So we already do a bearish example. Let me find a bullish example. Okay, we can see here. This one is going up, right? This trend. Okay, so then, okay, hold on. Let's go replay here. Okay, maybe this one. Okay lah. We just use this lah, just for the example for now. Okay, this is actually not an actual entry model. I just want to show you guys where would your price enter the market, so you understand how a candle forms, how a candle works. So this one, based on our story, we can understand that this one, okay, this was of course it's a bullish candle. We can see that quite clear. But if you realize this, don't really have a wick here. But it doesn't depend on the broker also, because different brokers tend to show different like a little bit of price action difference. Like some have longer wicks and all. That's why I always use the proper broker. Like the one that we're using is proper one, so no problem one. So if you realize in this one, right, in TradingView, it shows a very small wick here. Can you see that? So in this case, right, based on the story just now we mentioned about that racetrack, the buyers and sellers fighting and all, right? Okay, so if you try to play that story here, what happened here? Okay, this is the open, the bottom right of the body, and then this is the close, the top part of the body. So basically when price opened, what happened? There were seller and buyers fighting. Every candle got seller and buyers fighting usually. Okay, except when got the big news and this one you see big candle, but usually have also, sure have one, but just sometimes you cannot really see it. Sometimes candles will be whole, there is no wicks at all, because like it's so strong. Yeah, but in this case we stick to this one. Okay, so the price open, buyers and sellers, of course, I'm sure they fight with each other. I want to push the price down, oh I want to push it up, so they managed to push until here only. If you guys can see that, that's all. It's very cute wick. Still consider lowest point. Still consider, and this is still considered a low wick. Even though how small also, it's still considered. Okay, that concept all the same. It doesn't change. It never changes. So you see, even though this very cute small wick here also, this is the how low sellers could actually push the price. They couldn't win buyers here. They were very, very, very strong. Okay, so they push price all the way to this high, but eventually they were not strong enough to hold it there until the 4 hours close. So the price dropped down to this point and then price closed here. Okay, so remember, you want to go for buy model. You look at this, when we enter buy, you see the point of entry is at your close. So always keep that in mind when you want to enter, right? Always remember, where is the close of the candle? Is this a bullish candle or is it a bearish candle? The point of entry is this high. How much will I be risking? These are all questions all that you have to ask yourself as a trader. It's not just blindly, oh, okay, green candle buy, red candle sell. If you follow that, wow, we got so many opportunities to enter. Look at this, if like this, what do you want to do? Okay, we buy, oh we sell, oh we buy, oh we sell, oh we buy, sell, buy, sell, buy, sell. Gone. Everything should gone. Yeah, so this is just something that I want to share with you guys, you know, to understand more about what a candle is telling you. See, this is even bigger. Okay, so the safest one is here underneath this candle. Look at this. Actually, the most safer one is here. Look how much you have to risk. Again, the amount varies based on the lot size that you play. Okay, this one is I set for me to know. Okay, so this will be a safe zone. Okay, this TP1, this will be TP2, this will be TP2. Actually, TP1 also, you already get more already lah. Yeah, more than 1 to 1. So you see, oh my god, it came down to this point already. I think it was almost 1000 already in negative just now. See, 1003 just now, so. Okay, eventually yes, okay, it went up to hit our TP. This is not an actual entry model, not something that I will look at because I never really went to check this. I just wanted to show you guys about your entry points. It's always to the close. Yeah, so I hope that this one is clear now. Why knowing about a candle body, how a candle form, where a candle close is important, because it actually plays a big part in your, your entry. It really plays a very big part there. Yeah, so I hope this was insightful for you guys. So let me see my notes. What else will be covered today? Okay, so initially actually I wanted to speak about support and resistance so today, but then I want to make sure that I stick to this live being roughly an hour. So it's already an hour already today. So maybe we will end the live here today, okay? Because I want to give back time to you guys also to actually try to go and analyze and read the candles. Okay, this is a bearish candle. So you see here, this is a bearish candle. Okay, this is the point where the price opened. This is the point where the price closed. Buyers and sellers fight. Buyers only managed to push the price up to this point. Eventually sellers also were quite strong and it pushed them up to this point, but eventually once the time is up, the candle closed to this point. Yeah, and then you guys can also go and try to play like a treasure hunt. Go and find all of these dodgy candles on, and then you try to see during the point of reversals, right, can you find some dodgy? For example, you see here one. This is not exactly the tip. This is basically the toppers, the highest point before we see a big push down. But see who was present. Look at him, dodgy. He was there. Look at him, dodgy. He was there. Dodgies are candles that people like to see forming at points of reversals. Yeah, not necessarily only points of reversals. I shouldn't say that because they're not only used for reversals, they're used for many things in trading. Because trading is a Rubik's Cube. It's just a concept that can be applied in many different ways because there's many combinations to it. But the one that I want to explain to you today is about dodgies always being at areas where price eventually will shift or continue in the upward direction or downward direction, depending on your bias and depending on what you're actually looking for in the market. Yeah, so I think we will just leave the live from here. Okay, so we will give a lot of time back to you guys like compared to the first time we do live. So any questions you guys have or whatever, you guys know where to find me, you guys know how to reach out to me, just let me know. I hope this video was insightful enough for you guys, whereby you guys are able to finally understand that where is the open of a candle, where is the close of a candle, and why is it so important, especially for you traders that just want to start into this field you really got to be very clear about where is your entry model and where is your exit model, because that's how you make money. If you place buy here, for example, in a downtrend, by the way, if you place buy here, okay, your SL will be below the previous low. Where are you going to exit the market? Without knowing these details, right, you won't really understand where would you enter the market. I mean, where will you exit the market? And also, since this is a buy, where will we enter? Of course, we will enter in the close. This is the close. Again, this is not prediction. I'm not telling you guys the market is going to go up. Okay, I'm just letting you know that is important to really understand. Whenever you press the buy or sell button, what happens behind? Where would you actually enter? What should you do? Where should you aim? All of these questions, or eventually, don't worry, we will go through, and then you guys sure will understand. It will become more and more and more clear for you. For me, also, trading took over, I think 2 years. Over 2 years, I think 1 year, almost 2 years. Then I really got it. But throughout that almost 2 years, yeah. But the more mistakes you made, as long as you don't give up, the stronger you become. So whatever, if you don't understand right now, just remember that I was new too. I didn't understand anything. Trading looked like this alien planet, alien language, sorry, that I cannot understand. It just sticks on it, and then very thick sticks. Yeah, but somehow can make money from them. So that was very interesting for me. Yeah, so if you feel anything like that, don't worry, we will get through it, okay? Slow and steady, but eventually we will win it. Okay, so until next time, thank you all for tuning in today. I hope this was insightful enough for you. We'll be sharing a lot more on tomorrow's live stream, so do remember to tune in. Till then, thank you for joining in. Take care. Have a very good